Jambo, welcome again to another session of Kurgateri Finance and Accountancy Tutorials. Today, we are going to discuss about the double entry concept of accounting. If you have not subscribed to the channel, please do so. Like, share with as many friends as possible. Let others know also that we have a channel here that is teaching us free of charge. Also, don't forget to comment. If you have a question, feel free to reach me via the contact details that I have provided at the beginning or at the end of this video. So without much ado, allow me to go straight to what we are supposed to discuss today. The double entry rule or concept of accounting. So from the term double means two, isn't it? Double means two. The double entry rule or double entry concept of accounting states that for every debit entry in one account, there must be, or it must be followed by a credit entry in another account, and vice versa. So each and every transaction that happens in an organization, it must have two effects. One taking the debit in one account and the other one taking the credit, or the vice versa. That is, one taking the credit and the other one the debit. So that is what the double entry rule of accounting states, or what the double rule of accounting means. So from this definition, it is evident that there is this term that is common, the account. So it is important for us to understand what an account is before we move to the issues of credit and debit. I'll show you what to debit, what to credit, which side is debit, which side is credit. So, but first of all, I must explain to you or tell you what an account is and how it looks like. Just a quick recap. When I was introducing the accounting books, we say that the accounting books are divided into two, the subsidiary books and the principal books. I also told you that the subsidiary books do not follow the double entry rule of accounting that we've just stated here. And then the principal books do follow the double entry rule of accounting. And these principal books were the ledgers and the cash book. Do you still remember from our previous session, I told you that an account is a page of a ledger, isn't it? And a ledger is a principal book. So if you have a book like this, let's say this is our book here. This is a book. So if this is a book, inside this book, it contains pages. So each page of a ledger is an account. Let's say this is our page. This is a ledger page. Let us assume this is a ledger page. This ledger page, inside this ledger page, there is an account. An account is T-shaped. It is kind of a T shape. So inside this page, there is a division running from up, down, and there is a bar running on top, across. So this is a page, yes, but inside this page, it is T-shaped. This T-shape is an account. It is known as an account. And there is a division in between. So this division separates the two sides, the left-hand side and the right-hand side. This left-hand side is known as the debit side. And this is the credit side. So this is an account. So from what I've explained, we are now able to come up with a good definition of what an account is. So from what I've just told you, we can say an account is a page of a ledger is a page of a ledger. As you can see, isn't it? Recording what? So it's a page of a ledger recording, or you can say that records, you can say that records transactions. It records transactions, but these transactions relates to what? There's a big question. So it records transactions relating to persons, isn't it? You can say Eric account, you can say Swan Limited account, you know, for the case of limited companies, and we can say motor vehicle account. So for the case of these people, we can say relating to persons, I'm writing in capital letters, persons, and property like the motor vehicle account. So this is the definition of an account from what I've told you. An account is a page of a ledger. This is the ledger page. Inside the page, there is an account with two sides, the debit side and the credit side. Debit on the left hand side and the credit on the right hand side. So an account is a page of a ledger that records transactions. I will show you how to record transactions in an account relating to persons, very important, and property. Relating to persons and property. So in accounting, let me tell you this. In accounting, there are two types of persons. We have the natural persons and the artificial persons. So the natural person is a person like me and you. We were created by God, isn't it? So we have our own privileges and rights. The same case applies to artificial persons. An artificial person is like a company. So a company is an artificial person that has got also the rights and privilege like the natural person. So that's why these companies are also categorized under persons, isn't it? So since we know what an account is, now let's go straight to classes of account. I told you an account records is a page of a ledger that records transactions relating to persons and property, isn't it? And inside this person, I told you have the natural person, and you have the artificial person. Are we together? So the natural person, I told you, is a person like me and you, created by God. We have our own rights and privileges. The same case applies to the artificial persons. So the natural person, let me give an example. Like if we say the business organization sold goods to Kamau on credit. So Kamau is a person, isn't it? That is a person. Kamau is a person. And then we say the business organization sold goods to ABC Limited. So ABC Limited is a person, but artificial person. So in short, the natural persons here can be creditors, can be debtors, or creditors. Because if the business organization is selling goods on credit to Kamau, that means Kamau is a customer to us, isn't it? And the customer in business language is referred to as a debtor. And if for the case we say Kamau sold goods on credit to ABC Limited, so that means that Kamau is a creditor in this case, the supplier, isn't it? So these accounts here for the natural persons and for the artificial persons, because here also an artificial person can be a debtor, can be a creditor at the same time, isn't it? So the accounts here, the accounts that are kept in relation to these ones are known as the personal accounts. The personal accounts. So the personal accounts, these are the accounts that are kept for persons Are we together? Remember, I told you that an account is a page of a ledger recording transactions relating to persons or property. So the accounts that are kept for persons are known as what? The personal accounts. Remember, at the end of what I'm explaining here, we'll be able to get what is known as the classes of accounts. So I'm trying to at least go around, make sure that you understand, so that when we will be discussing what the classes of accounts are, we will be having the whole idea of the same. So the accounts that are kept for persons are known as the personal accounts. That's all. So let's move to property. Property are normally divided into two. We have the tangible ones, tangible property, and the intangible property. Tangible and intangible property. From the term tangible, it means that these are the properties that you can touch and you can see and you can also feel, isn't it? From the term tangible. So in short, the tangible property are real. It's like this duster of ours here, or a pen. So these are tangible property. I can see it, I can touch it, and I can feel it, isn't it? So these are real items. So the accounts that are kept for tangible items are known as the real accounts. So these are the accounts that are kept for what? The tangible items, because they are real. So that is where the term real accounts came from. So we have the intangible. So this is the opposite of the tangible. These are properties that you cannot see, you cannot touch, and you cannot feel. Are we together? So for example, you have I'm thinking of an example. So let's say Kamau or ABC Limited paid salaries to its employees in cash. So the double entry here is the salaries account and the cash account, because we are paying salaries in cash. So the salaries account is there, and then you have the cash account. You can see and you can touch and you can feel cash, isn't it? But you cannot see and you cannot feel salary. So I don't think there is any person who've seen salary before. Salary account you cannot see, but you can see the cash in relation to salary, isn't it? So the intangible property, these are the properties that cannot be seen, touched, or felt. So, and the accounts that are kept for intangible properties are known as the nominal accounts. Nominal accounts. So these are the accounts that are kept in relation to the intangible property. And I gave an example of the salaries account. Salary account cannot be seen, cannot be felt, and cannot be touched, isn't it? But if you paid either by cash or by bank, so the cash and bank in this case are tangible, you can see, you can touch, isn't it? So that is it. So from what we've learned here, from what I've explained here, we can now get the classes of accounts. Classes of accounts. Number one, what is the first class? The first class is personal accounts, isn't it? Personal accounts. The second one, real accounts. The third one, the nominal. So let us try and explain what each and every one of these mean, according to, as per how I've explained to you. The personal accounts. These are the accounts that are kept for persons, and the persons can either be debtors or creditors. And the persons can either be natural persons like Kamau Limited or Eric Limited, for my case, can be ABC Limited in the case of a company. That is personal account. Accounts that are kept for persons. Full stop. The real accounts, these are the accounts that are kept for tangible property. Are we together? So these accounts are kept for tangible property. For instance, the motor vehicle account, right? The motor vehicle account. Motor vehicle, you can touch a vehicle, you can see it, and you can feel it. So it's a real property, it's a real item. And the accounts that are kept for these real properties known as real accounts. That's the definition of that. Simple definition is that. And then nominal accounts. These are the accounts that are kept for intangible property. For instance, salaries account, you cannot see, you cannot feel, and you cannot touch salaries. Rent account, that is, you cannot feel, you cannot touch, and you cannot see rent, isn't it? So those are the nominal accounts. So in short, the classes accounts are personal, real, and nominal accounts. So ladies and gentlemen, make sure that you've understood this part, this foundation level. It's very important. Remember, if you have poor background in accounting as far as the accounts are concerned and the ledgers, opening of the accounts that I'll show you shortly, if you have poor background as far as the same is concerned, you'll have many challenges in future as you progress in your financial accounting. So once again, ladies and gentlemen, we've said the double entry concept of accounting states that for every debit entry, there must be a corresponding credit entry in another account. There must be, take note, there must be a corresponding credit entry in another account, and vice versa. And vice versa, in this case I told you, is like saying for every credit entry in one account, there must be, or it must be followed by a corresponding debit entry in another account. So in short, let's take an example, like we say, example, ABC Limited sold goods to Kamau in cash. So the first thing to do here is to determine the accounts. You analyze this statement and then you come up with at least two accounts. So ABC Limited sold goods. So there is this sold goods. So in business language, we call this sales to Kamau in cash, isn't it? So the cash is affected and also the sales is affected. So we'll have two accounts here, like for sales account, I told you an account is T-shaped, and cash account, isn't it? So the big question is now, or the big next step is, what am I going to debit and what am I going to credit? How am I going to enter the same? So that one should not give you problems, because I'll take you through the same. I'll show you how, what, and which accounts have got what kind of balances, and how if you increase one account with this, how it's going to be affected, and so forth. So ladies and gentlemen, that is how to open an account. In our next session, I'll show you how to debit, what to debit, and why we debit, how we credit, why we credit, and what kind of balances that these accounts will have. So ladies and gentlemen, that marks the beginning of the end of our session today. But before I conclude, allow me to do a summary of what we've done today. So we've said the double entry system of accounting states that for every double debit entry in one account, it must be followed by a corresponding credit entry in another account, and vice versa. Vice versa meaning for every credit entry in one account, it must be followed by a corresponding debit entry in another account. We went ahead and said that an account is that page of a ledger. An account is that page of a ledger which records transactions relating to persons and property. So in this case, we said persons can be natural persons like me and you, created by God, or the artificial persons. And these persons can be the debtors or the creditors of the organization, isn't it? And we say the accounts that are kept for persons, the debtors and creditors, are known as the personal accounts. We also say that the properties are divided into two, the tangible property and the intangible property, right? And we say that for the tangible property, these are the properties that you can see, you can feel, and you can touch. So they are real. And the accounts that are kept for this tangible property is known as the real accounts, isn't it? We say the intangible property is the opposite of tangible. These are the properties that you cannot see, you cannot touch, and you cannot do what? You cannot feel. So, and the accounts that are kept for these intangible properties are known as the nominal accounts. Are we together? And then we went ahead and said, from our explanation before, we can get, from the explanation, we can now come up with the classes of accounts. And we said the accounts now can be personal accounts for the case of the person, the natural and artificial persons. And we can have the real accounts for the tangible property and the nominal accounts for the case of the intangible property. So, and I also did show you how the accounts look like, and promise that in our next session I will show you how to enter the transactions in various accounts. So ladies and gentlemen, that marks the end of our session today. So until next time, it's goodbye for now.